Palantir has been riding a tremendous artificial intelligence-driven surge, and its newest developments have sparked a fresh wave of excitement among investors. The technology company has long been recognized for its extensive relationships with government agencies and its growing reach across the commercial sector, yet this time it revealed a new alliance with TWG Artificial Intelligence shortly after hosting a highly successful multi-demonstration customer showcase that received notable praise from Wedbush. Moving from the showcase to the broader landscape, this collaboration comes right on the heels of a recent Palantir conference where well over 30 artificial intelligence demonstrations were presented to clients. Analysts noted they were surprised at the wide range of real-world uses highlighted during the event. Beyond the TWG announcement, Palantir also expanded its ties with Nvidia for advanced artificial intelligence chips and tools, and it even secured a directive from the United States Army to deploy its Vantage platform across every command and organizational level. With this momentum carrying into the financial world, many observers suggest that Palantir is rapidly deepening its presence in the artificial intelligence side of finance. This naturally raises a central question for investors. Is there meaningful upside ahead, or has the stock already climbed to the point where flawless execution is assumed? Palantir, founded in 2003, is an artificial intelligence-focused software company whose platforms, including Foundry and its newer artificial intelligence platform, help governments and enterprises interpret enormous and complicated datasets. Although its early years revolved around national security, the company now supports industries such as finance, healthcare, defense, and more, transforming fragmented information into real-time insight. Its tools are widely used by United States agencies, along with banks, insurers, and other institutions to automate decision-making and complex workflows. At a valuation of roughly $435 billion by market capitalization, shares of Palantir have climbed about 140% year-to-date. After touching that peak, however, the stock slipped by about 12% to roughly $182, which is close to its current trading zone. Much of this decline stemmed from insider selling pressure as well as concerns about elevated valuation levels. In effect, Palantir moved from being viewed as a deep value opportunity earlier in the year to a company trading near record territory as investors factored in rapid future expansion. Even with this retreat, Palantir's valuation remains extremely lofty. It trades at roughly 320 times trailing price to earnings compared to around 24 times for the broader technology sector. Its enterprise value to sales ratio sits near 100 times, far above the sector median of 4 times. These immense multiples suggest investors have already priced in substantial advances from its artificial intelligence offerings, leaving a very small margin for disappointment. The company's newly established collaboration with TWG Global stems from a shared goal of bringing advanced artificial intelligence software into the financial industry. TWG is an investment group dedicated to implementing artificial intelligence within complex environments such as banking. The arrangement strengthens a combined initiative to apply Palantir's artificial intelligence platform to transform major processes throughout large banks and insurance companies, including underwriting, trading, and risk management. From a theoretical perspective, this could open an important set of opportunities. By pairing Palantir's technological capability with TWG's established access to financial institutions, the company gains a pathway toward reaching a significant new audience. Analysts viewed this as another sign that Palantir's ecosystem continues to widen, drawing attention to the combination of three forces: leading-edge models from xAI, the established data infrastructure from Palantir, and the execution strength offered by TWG. Yet, transitioning from theory to reality requires patience. Investors are encouraged not to assume immediate results from this partnership. Large-scale alliances rarely generate rapid financial returns. Integration challenges have slowed earlier efforts involving Palantir, Nvidia, and xAI. Despite the enthusiasm surrounding artificial intelligence, several analysts warn about the possibility of a broader artificial intelligence bubble forming. Renowned investor Michael Burry even took a bearish stance on Palantir by placing a bet against the stock. Because of this, the TWG alliance is more intriguing as a strategic milestone than as an immediate source of revenue. At this moment, it represents a show of confidence in Palantir's long-term direction rather than a guaranteed contract pipeline. Time will reveal whether it ultimately drives tangible deals and meaningful gains. Turning to the company's latest results, Palantir delivered a Q3 performance that exceeded expectations in dramatic fashion. Revenue reached $1,180 million, a surge of 63% year-over-year, easily surpassing analyst forecasts. Growth appeared across nearly every category. Commercial revenue increased 73% to $548 million. United States revenue jumped 77% to $883 million, and overall profitability reached new record levels. Earnings per share landed at 18 cents, crushing the 12-cent consensus. Cash generation looked just as strong, with $508 million in operating cash flow and $540 million in free cash flow, bringing Palantir's total cash balance to $6,400 million. Management increased expectations across the board. For Q4, the company now anticipates revenue between $1,327 million and $1,331 million, which represents growth of roughly 60%. Full-year revenue is anticipated to land between $4,396 million and $4,400 million, comfortably ahead of earlier outlooks. Alex Karp even declared that this may be the strongest performance ever reported by a software company, and the numbers support his confidence. Turning to Wall Street sentiment, analysts remain supportive yet cautious. Dan Ives of Wedbush reiterated an outperform rating and raised his 12-month price objective to $230, citing Palantir's accelerated artificial intelligence adoption. Morgan Stanley maintained an equal weight rating with a $205 target, while Goldman Sachs set its target at $188. They acknowledged the company's exceptional quarter, but also pointed to its extremely high valuation and the need for continued flawless execution. In summary, analysts recognize significant long-term opportunity while noting the risks that come with such rich pricing. Overall, Wall Street holds a consensus rating of hold for Palantir, with an average 12-month price target of $191.07, implying about 6% upside from current levels. In my view, Palantir continues to demonstrate strong fundamental performance and expand its competitive edge through alliances such as the TWG partnership. However, the stock now trades as if every ambitious goal will unfold perfectly. Much of the optimistic narrative is already reflected in the price. Still, momentum and the broader artificial intelligence story keep pushing the stock to new milestones. For investors willing to tolerate steep valuation metrics, Palantir may continue to serve as a compelling long-term opportunity as the artificial intelligence revolution deepens. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.